Good evening. Ira Epstein, and here we are on Thursday, and this is the 21st of August, 2025, and the time's 5:10 p.m. Central Time. Well, as you can see, we've reopened the markets. Gold's still hanging near the 3,400 level. Silver's back up into the mid 38.5 zone. Copper's been holding. Tomorrow's a big day. Tomorrow we're going to get the Fed chair, and he's going to speak at Jackson Hole. Kickoff speech at 9 in the morning. The markets are looking for him to either be a dove or a hawk, and I say he'll be the same old Fed Chair Powell you've had. He will say he's data dependent. The meetings are live. The markets, they have two mandates, which is the inflation and full employment. Inflation is climbing a little. The employment market is in good shape and still strong. And in my point of view, I don't see how the data at hand, the word is at hand so far, warrants a rate cut in September. You've already taken the Fed watch page from 94% probability just a week and a half ago or so, now down to 73% tonight. That can go right back to 94. I think that what he's going to allude to is they're looking at PPI, CPI, the PCE index, and of course, the labor markets, and what has really changed. They're looking at inflation gradually coming through the economy now, and it is picking up momentum. You don't have to believe me. Talk to the heads of Walmart, big company, right? Monster retailer. They're seeing it. So companies at first will do their best to absorb some of the increases, but after a while they come in the other way, and that's what you're dealing with. You're also going to get a cattle on feed report, but the day is going to be, if you're in the financial sector of the futures, at 9 o'clock, that's going to take center stage. Cattle on feeds at 2 o'clock, a complete different part, and the cattle market will be closed at that time when it comes out. You're getting a bit of short covering tonight in the stock market. The dollar came up another 40 points. You're not getting much bounce against it in the early evening trade. The dollar opened at 7 o'clock, so it's got a ways to go there yet. On the energy markets, we've been getting short covering, in my opinion, and in large part because of what Russia's stance is on ending the war with Ukraine, and it's not realistic. They, as I've told you, they want to control everything. They want to tell you where the lines are going to be drawn. They want to tell Ukraine what they can and can't do in the alliance with their allies and how the allies can't come in to defend them. It's a non-starter. The Russians will give you their reason why it's a non-starter, but it's the fiddle. They're playing the president, buying more time. There'll be a point in time where President Trump will give up on diplomacy and have to hit Russia with really hard sanctions. The big question is, what can happen with them? All right, and I'm talking the sanctions. He's already punishing and about to really hit now India with major 50% sanctions. The date's right in front of us now, so be ready. This is all coming at you. The bonds and notes, they're trying to figure out where do you go with all this. You couldn't get more neutral in the gold market than this going into the report. You're basically trading at the 18-day average of closes. That number is 33.2890. The last trade's 33.4340. So market's just stuck right here waiting. That's what I was hoping to see. If you remember my gold report and you looked at it, this pullback I was definitely looking for. It's filling in how I want. And then what I think the next catalyst is, believe it or not, you can get a catalyst off of whatever Powell says, but it's the reality of the CPI and PPI and the PCE reports. Those are what I want to see. We have time for that. The trend has been basically down with lower highs, lower lows on the swing line. The market got as low as you can see to the 100-day average and fighting with resistance, now resistance at the 18. On the way down, it was fighting back and forth here, and it's slipped down another notch, which is just fine. When we take a look at where the market's at in terms of the Bollinger Bands, they're not in play right now. They could be tomorrow off a big move, but you'd have to drop to $33, $29, $60 in the gold to the downside and go up rather dramatically about $90 to the upside to hit it. When you look at momentum, you're oversold as can be. So could there be a surprise? There could always be a surprise, maybe a dovish or a hawkish chairman comes out. I don't think he'll be either. I think he'll be just what he's been. I think he'll avoid the politics with the president. He doesn't have to get involved. The reality is the president has to fire him for cause, and he doesn't have it. He may not like how he's running the Fed, but other members are coming in. And remember, only 2 members voted against what the majority wanted here. And those members, well, they could be up for chairmanship of the Fed coming up in May it is. So I don't know. I think he's got to mandate it that if the members had a vote right now, they would vote to hold rates steady. In the gold-silver ratio, it continues after challenging the 18-day average to continue in the favor of silver. As you can see, silver's trying to lift itself. If it can get going to the upside, the upper Bollinger Band of 39.30 should be a lot of resistance. But the bigger picture is the market had a narrow set of bands. It widened them out and then gave up on that, and it's reshaped their bands to being narrow. Do I see a reason to break out one way or the other? Frankly, I don't. So maybe there's something here that I'm looking for that could be a surprise. Copper seems to be working sideways to the 18-day average of closes. You lost the bearish momentum, so I could see those two coming together. And you're back over in the platinum, the 18-day average, trying to say, okay, I'm not going to stay down there, but up here, and look at how much you've narrowed in. There's just nothing to be done there. There are times when you got to keep your hands in your pocket. You're better off, and that's one of these right now in these markets. Now, the dollar is trying to lift itself. If interest rates stay firm, that's bullish the dollar. If the Fed starts cutting interest rates, in my opinion, that's bearish the dollar. I didn't say what it has to do with the economy. I'm talking the currency itself. So we'll see. The market is trying to get a rally, hoping that the Fed won't stay with high interest rates, but that doesn't make sense. What's really happening is the smart money is saying the Fed's not changing its position, and I think that's why you're getting a rally right now. Do I think we're going back up here? I have no reason to believe that. I think you're caught in the narrowness of this. Maybe tomorrow offers us a shot at understanding everything. But you have a shot of understanding a lot too, because my guides to technical indicators, volumes 1 and 2, this is how they'll print out for you. And you get a full understanding when I'm talking slow stochastics, moving averages, what's a Bollinger Band. At times we'll talk chart patterns here, inverted head and shoulder, a pennant formation. All this is explained in detail with examples and so on. All you need to do is go to our website at iraepstein.com. You can also at any point up here give a click. You'll see the icons. That'll take you right to the area you need to be. And while at it, take advantage of trying our charting software. I think you'll like it. And take a look at all the other things that we offer. Could be something that fits in there for you. I'm Ira. I'll see you tomorrow morning in the morning flash update. And of course, tonight in my other videos. You have a great evening. It's iraepstein.com. Free offers. Remember that. Take care.